Welcome back to the channel. I'm Algabot, and today we're studying an expert advisor for MetaTrader 5 called Time Value Area Reversion. This strategy is built on classic auction market theory and market profile, using something called time price opportunities to map where price has spent most of its time. It's a mean reversion, price action approach that fades failed auctions back toward the fairest price on the chart. By the end of this video, you'll understand how the profile is built, how entries and exits are triggered, and how the code expresses all of it. Remember, this is educational information only, not financial advice. Let's start with the big picture. Time value area reversion is a market profile strategy. Auction market theory suggests that price spends most of its time inside a region called the value area and only briefly visits prices outside it. When an auction pushes beyond value and then fails, meaning price closes back inside, the market has effectively rejected those outer prices and often rotates back toward the fairest price. That fairest price is called the point of control, the single price level that was visited by time more than any other. What makes this approach distinct from volume profile or VWAP strategies is that the histogram here is built purely from time. Every closed bar contributes 1 unit, one time price opportunity, to every price bucket its high to low range spans. Volume plays no part at all. This is the classic market profile time count. The EA constructs this profile over a configurable number of closed bars before the signal bar. It splits the window's high to low range into equally sized price buckets, deposits a time unit into every bucket each bar overlaps, and then identifies the busiest bucket as the point of control. From there, it grows a value area outward around that point until it captures a chosen fraction of all the time activity, 70% by default, which is the traditional market profile setting. This EA is designed as an educational example of a rotational, balance-seeking trading style. It naturally suits liquid instruments such as a major foreign exchange pair or an index on intraday timeframes from 5 minutes up to 1 hour. It's a single timeframe system with distinct rules for long and short trades. A balance gate ensures the strategy only engages when the market looks rotational rather than strongly trending, and every position is managed by an ATR-based stop and a target at the point of control. As always, trading carries risk, and losses do occur. Let's walk through the exact logic step by step. On each newly closed bar, the EA first checks that it has enough history, that no position is already open for its magic number, and that the current spread is not too wide. Then it builds the profile. It scans the window of closed bars before the signal bar to find the highest high and the lowest low. That range is divided into equal price buckets. Each bar then deposits one time unit into every bucket its high to low range touches. The bucket with the most time units becomes the point of control, the fairest, most visited price. Next comes the balance gate. The EA measures where the point of control sits within the window. If it lies too close to the top or the bottom, the market is considered trending, with value pinned to one extreme, and the strategy stands aside. It only proceeds when the point of control sits near the middle, signaling a balanced, rotational environment where reversion to value tends to be more meaningful. The value area is then grown outward from the point of control, always stepping toward the busier neighboring bucket, until it holds the chosen percentage of total time activity. The lower edge becomes the value area low, and the upper edge becomes the value area high. Now the entries. For a long, the strategy detects that the just closed bar's low poked below the value area low, but the bar closed back inside value, above that low edge, and still below the point of control. That's a rejected below value auction. The EA signals a buy, targets the point of control, and places its stop 1 ATR below the probe low. For a short, the mirror applies. The just closed bar's high poked above the value area high, but the bar closed back inside value, below that high edge, and still above the point of control. That's a rejected above value auction. The EA signals a sell, targets the point of control, and places its stop 1 ATR above the probe high. Before either order is sent, a minimum reward to risk filter checks that the distance to the point of control is worthwhile compared with the stop distance. If the setup is already sitting on top of fair value, it's skipped. One position per magic number, and the ATR stop and the point of control target manage every exit. Let's read through the code as it appears in MetaEditor. At the top are the input parameters. Profile period sets how many closed bars build the time profile, and bins controls the price bucket resolution. Value area percent defines how much of the time activity the value area must hold, defaulting to 0.7, the classic 70%. Center tolerance is the balance gate that keeps the point of control near the middle. ATR period and ATR stop multiple size the stop. MinRewardRisk filters weak setups. Max spread points guards against wide spreads, and lots and magic set the volume and identifier. Now the long block. The condition checks three things together. The signal bar's low dipped below the value area low. Its close came back above that low edge, and its close is still below the point of control. When all three are true, the EA reads the ask price, sets the take profit to the point of control, and sets the stop 1 ATR below the probe low. If the reward divided by the risk meets the minimum, it calls trade.buy with those stop and target levels. The short block mirrors it exactly. The signal bar's high pushed above the value area high, the close returned below that high edge, and the close is still above the point of control. The EA reads the bid, targets the point of control, and places the stop 1 ATR above the probe high. Once the reward to risk check passes, it calls trade.sell. Both sides always fade back toward fair value. Let's bring this to life on the chart. You can see three horizontal reference lines drawn from the time profile. Near the middle sits the point of control at 1.0865, the fairest, most visited price. Below it is the value area low at 1.0840, and above it is the value area high at 1.0890. Together, those two edges bracket the region where price has spent most of its time. Notice the point of control sits roughly in the middle of the window, so the balance gate is satisfied and the strategy is willing to fade toward it. Watch the opening candles. Price is drifting lower, easing away from the point of control and heading down toward the value area low. The second and third candles press right down to that green line, testing the lower boundary of value. Now look at the fourth candle, our long setup. Its low pierces below the value area low, briefly trading beneath value, but then buyers step in and the candle closes back above that green line and still below the point of control. That is exactly the failed below value auction the strategy is waiting for. The probe outside value was rejected, so the buy entry marker fires on that candle. The stop is tucked 1 ATR below the probe low, just beneath that rejection wick, and the target is set at the point of control above. From there, price rotates back up, exactly as auction theory suggests. The next candle recovers, and the following candle climbs right into the point of control, where the take profit target is reached. The long trade has rotated from the lower edge of value back to fair value. But the move doesn't stop there. Price keeps pushing higher, drifting up through the point of control and heading toward the value area high. The seventh candle presses against that upper red line. Now the ninth candle gives us the short setup, the mirror image. Its high spikes above the value area high, poking beyond value, but sellers reject it, and the candle closes back below that red line, and still above the point of control. This is the failed above value auction. The sell entry marker fires on that candle. The stop is placed 1 ATR above the probe high, just over that rejection wick, and the target is once again the point of control below. Price then rotates lower. The next couple of candles ease down, and price glides back into the point of control, where the second take profit target is met. Both trades share the same core idea. A probe outside value is rejected, the auction fails, and the strategy fades that failure back toward the fairest price in the middle. That's the reward to risk filter in action too, since both targets sit a worthwhile distance from their stops. Of course, not every probe rotates cleanly back, which is why the ATR stop is always in place to define the risk on each trade. So there you have it. Today we explored time value area reversion, a market profile expert advisor that builds a pure time histogram, locates the point of control and value area, and fades failed auctions outside value back toward the fairest price. We covered how the profile is built, the balance gate, the long and short entry rules, the ATR stop and point of control target, and how it all appears in the MetaTrader code. Remember, everything here is educational information only, and not financial advice or a recommendation. Trading involves real risk, and losses are a natural part of it. If you found this helpful, please like the video, Subscribe for more MetaTrader strategy breakdowns, and leave a comment with strategies you'd like us to analyze next. Learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.